Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the Dow Jones Industrial Average, being recorded on Sunday, September the 14th at 9:50 a.m. Pacific Daylight Time. Last week was actually a good week for the markets in that they rallied strongly, but not as clear, immediately not as clear as direction, which we had constantly being put into play two different scenarios. One that covered more to the downside over the near term, over the very short near term, versus the little bit larger account, which continues to suggest that we rally again to new all-time highs. Now, here in the Dow, I'm going to start here on my monthly maximum chart, and that data goes back to 1902, I think, or 1903, 1902. So here we have 123 years of data compacted into one screen. And I start my largest count by the count that R.N. Elliott himself started his work with, and that is the grand supercycle. So as I mark it, I'm just going to review this very quickly. I have grand supercycle wave 1 finishing in September of 1929. Grand supercycle wave 2 finishing or bottoming in June of 1932. From there, we entered into a supercycle degree. So we're in a grand supercycle wave 3, and that'll consist of 5 waves of supercycle, which 1 and 2 are complete. So we're in supercycle wave 3 of grand supercycle wave 3. And then within supercycle wave 3, there are going to be 5 waves of cycle degree. Now, this is the one that's important because I believe that we're getting very close to finishing cycle wave 3. Cycle wave 3 began in 1949. So here we have about 76 years of data or of a rally phase. Now, all kinds of things took place within this. We had a period of stagflation right there in the 70s. That, my friends, right here, is the 1987 crash, which many thought the end of the world. Here is the primary fourth wave, and within the primary fourth wave, the Dow all by itself in 2007 went up and produced a new all-time high, and then proceeded, also within this primary fourth wave, to go through the great financial collapse of 2008, 2009. Then within primary wave 5, we had the pandemic. Another period of time where it was like there just wasn't any forward sight or any forward feeling that we're going to get out of this with any semblance of normalcy. But we did. Now, we are continuing to rally. So let's just go over that large count. We are in minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. So I'm going to drop this down very quickly to the 5-year weekly chart, excuse me. And here we have intermediate wave 3, intermediate wave 4. So here is intermediate wave 5. Inside that's going to be 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. Minor wave 4 finished on April the 7th of 2025. So from that point, we have been in a minor fifth wave up. This is on a minor degree, the last 5 up to finish all the way up to that cycle 3. So what's going to be inside of minor wave 5? 5 waves of minute degree, of which 1, 2, 3, and 4 are done. I'm going to bring this down one more time to the daily. And here we are inside of minor 5, but we can see the breakdown a little bit cleaner. 1, 2, 3, 4 of minute degree. Minute wave 4 completed on August the 1st. So since then, for the last month and a half, we have been rising within minute wave 5, which will finish minute 5, minor 5, intermediate 5, primary 5, cycle 3. So you can see how we're just building to and getting closer to. Now within minute wave 5, there will be 5 waves of minuet degree, of which is 1 and 2 are complete. So we're still within this minute wave 3 of minute wave 5. Now I'm going to bring this down, put it on the hourly chart, and we can take a look inside minute wave 5. There's wave 1, here's wave 2. So that puts us in minuet wave 3, and it will also consist of 5 waves. Now, but it's subdividing, as it should. And where we're finding the subdivision now is within wave subminuet wave 3 of minuet wave 3. Very typical and not that easy to actually count. And here's why. The moves that we're seeing are a little bit larger. And I just need to put this up one little tick higher. There you go. Let's get it up there. Yeah, good enough. So where we are, we have 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3. And now we have, I believe, last week on Thursday, completed sub-minuet wave 3 of sub-minuet wave 3 of minuet wave 3. So this is kind of the largest portion. Now here's where it starts to get a little more difficult. This rally was dynamic, and this one happened last week on Thursday. And it was, we had the CPI, we had the PPI, all the good stuff coming out. And we rallied strongly, and we reached up to, let me see what that high was, 46,137. That's in the cash market. And I think that completed that third wave. So now we're in a fourth wave, but boy, we are very close to crossing back over and penetrating or trading below the endpoint for wave 1. And that continues to just be, for me, it breaks a pattern. I actually, as I've described before, there's the rules that I absolutely adhere to. And one of them is that wave 4 cannot overlap wave 1. Because if it does, then it's really not correcting wave 3. We're just kind of going through it. But then here we have all of wave 3. And if I just kind of put this together and put the fibs up, there's a chance it might. And as much as I want to say that I won't like it, because that part's true, but I'm hoping that I don't have to make that decision. So I bring it down to a line chart, which takes out a lot of the extremes, right? The extreme push or the extreme decline that rallies up off of it or declines off of it quickly. And so we have a little bit more room on a close basis. But I see that we came down and we did uptick a little bit into the close on Friday. And now that expiration is done and out of the way, what I'm reading, and I'm going to call the same thing, the market should pick up the rally again. In terms of that, it should kind of come up in a fifth wave inside this third and put the high of that third in. Now, if that's the case, what do we got? Well, let me bring this back out and put it on the bar chart so we can see it clearly. We have this resistance is for the minor degree. It's just there because it continues to be resistance. I think it can be exceeded, and that might give us that little bit extra push that we need to get up into these levels to finish this sub-minuet third wave. Excuse me. So wave 5 would be equal to wave 1, which is most common, at 46,366. Now, mind you, that this next level up, which is the sub-minuet, would also can complete there. If I get a 1, 2, 3, 4, I'll put here, and we get a 5, that's also going to complete not only this, but it's going to complete this third. And then we get another fourth wave. And that would be more likely to come back down towards this area. Because if I put the 4 here, right, and this comes up and finishes here this third, then as Elliott teaches, the fourth wave in progress will find its terminus, its endpoint, within the fourth wave of one lesser degree. Well, if we're in the sub minuet, the 1 degree less is the sub, and that would be right there. So we'd be kind of looking like for the market to kind of get back towards that low, which is 45,814 on the cash market. Now, again, it'll be tight because even though the market rallied, it's leaving it in kind of a dangerous level because we have 45,641 that the next up fourth wave cannot cross over. So it's gonna get interesting. Now, if I have to consider that this comes down and breaks that, and then what could it be? Well, I have one more, even though I'm counting this as five, and that would be that I'm going to count it as an ABC for A, ABC for B, and five up for C for wave one. That puts this whole move of minute wave five in a diagonal triangle, which again, after the strength and the length of this particular bull phase, and actually of this last five up on a minute degree and a minor degree, well, there's been a lot of strength. And so for it to finish in a diagonal, which is just a race to the top, that's what it's going to appear like because we would be wedging higher. And so wave one would connect to wave three, which isn't even close to being done yet. So I haven't put into what I think this size wave three can be. In fact, I can do that now, just so that we get all of our in alignments together, and we'll see what all of that looks like. Yeah, you can see it's up 47,000. So let's kind of go in there and just set this up for right now and put our numbers on there. Then we can complete our picture for what we want to see. And I'm going to take all of this out because what we look for, of course, is 1 to 1.618. Those are the two levels that we'd be looking at. So 100% is at 47,377. So again, if this third gets up to this upper level and this fifth wave equals it up here, well, then that's going to be a level. But first we got to get through these two, which also can complete this and set the stage for this third eventually. Now, what I mean by that is like we get the fourth of five. So that puts this third done. Then we get a four and a five, and that makes this third done. Well, if we're going to be up to equality, which again is the most common relationship between a fifth wave and a first wave. Because what we're doing is we're taking the distance of wave one, attaching it to the low of wave four to get our fibs for that wave five, that fifth wave. And so that's where it comes out. And that's if we're calling it from here, that this is one and then two, and then where can wave five come in? Or wave three, excuse me. And it's 100%. And as always, I'm going to be looking for a little bit more. So on the heels of that, we have minute wave five equaling 100% at 47,596. So what does this begin to tell us? Remember, we've been also talking about how the algorithms are talking about a surge in the markets, really going into the fourth quarter. Well, here we are still finishing up the third quarter, and it's looking very likely that we may hit these levels expected to finish all the way up to cycle wave three before we actually drop into the fourth quarter. So again, kind of a little bit of difference is going on here. But as we get closer, I'm going to rerun the algorithms for the end of year and see if there's some adjustments have been made there simply because of because of the ground that we've covered. It may not, which means I'm going to have some more extensions here. And that could make things very interesting. So again, we're just getting ready to finish the minuet third wave. And we still have plenty to go before that's done. And then we have a minuet fourth wave and then a minuet fifth wave, and that'll complete this minute fifth wave. So, but the minuet five could extend. We cannot discount. We've got these additional levels up here. Now, does that suggest that that's where we're going? Well, no. I mean, it does and it doesn't. It just gives us an indication of when levels start to get broken up here in new high territory. There aren't any points to give in terms of, well, the market reached this level, and so therefore we can find resistance there in a price point, or we can find resistance at different levels, or even support at different levels. So it becomes, I hate to say it, but more like just this push into darkness. It's just like black holes up here. And I call it that because my background is dark. But that doesn't mean that the market's going to, consider, oh, we're running up on negative. And because I think actually we're going to run higher in advance of what is expected next Wednesday. 17th is number one, it is a volatility expiration, a VIX expiration. Okay. So it'll have a little bit of a pull either way because volatility normally does. So either we're going to see volatility sink, the market rise, and then, but also on next Wednesday, the 17th, is the FOMC decision. And so the market is basically stating and convinced that we will get at least a quarter point cut. And that algorithms, along with, unfortunately, I'm going to say, there will be some that'll jump in and simply because things kick in and, oh, look, we're breaking out. Because actually, if we rally and spike up off of that deal, and we're already at these higher levels, well, they're new all-time highs. So again, where we can reach could go very, very quickly. And the other reason is like, I don't expect there to be thick orders laying out here. There might be order blocks. So in other words, it's like where sellers who need to kind of put a bunch of stock or a bunch of futures or a bunch of whatever up at these higher levels. And if the algorithms are kicked in and they have a large order to fill in terms of buying, well, they're going to head for those. Now, everything is already in the system. So in other words, it's like it'll go and it could just spike. And there's a lot of talk about what that spike could do after. Is it going to just like mark a top real hard? And therefore then we get the term tombstone top because it's like putting a tombstone on that high. Because what's the market got after that? Just to be able to drop. I prefer to use the other term that kind of caught my attention, and that is the Wile E. Coyote moment. Those of us old enough, or even if most of us should be aware of the Road Runner comic. And with that in mind, Wile E. Coyote is always chasing the Roadrunner, and many times off a cliff. And suddenly there comes a point where he suddenly looks and realizes he looks down, and there's nothing there but air, and he drops. Well, same thing for the market. It's a Wile E. Coyote moment where suddenly we realize we've got to a point where it's like, why are we here? There's nothing underneath it. There's no more people coming in or no more buyers coming in. What's left to drop? And so it could be a very quick drop off of that, which would then kick in the potential that we have for the whole sequence all the way up to cycle 3 completing. So more on that as it happens, actually, because I'm certainly not trying to call a top here. I mean, it is going to come, but I'm not wrapping any numbers around it right now because we have too much left to do in terms of the market. So just back to here, I'm thinking we start the week, we rally. And this is a pretty, I think could be a pretty tough zone, at least for Monday and Tuesday, to start to break above. Now we may get up here, finish the 3, come down in the 4, go back up in the 5, and that 5, which would be to finish this. Okay, we get the 4 and the 5 for that 3. We get the 4 and the 5 for this 3. And that might take us up to, so this is going to change the dynamic just a little. If we get up to here within minuet wave 3, and that comes on Wednesday with a spike, Well, now, unless we spike hard, and then you can see where the next level is, 48,890. So depending how hard this market wants to rally, and again, when we're getting a lot of our stocks up into new all-time territory as well, or just back towards them, well, you know, it pushes these up into the ozone, as I call it. So again, I'm taking it day by day just to see. But for right now, I'm thinking we got this zone here to finish this fifth and this third. And then we'll put the markers out for a fourth wave, and that would be a sub-minuet fourth wave. And then we get a sub-minuet fifth wave up to complete minuet wave three. And there our markers are there to here. This would come in on first we got the three, and then a four, and that five would complete this three. So those are the markers up into here. This just goes along for the ride. That is where we know that minute wave five has met the requirements in terms of reaching a level that can complete. Doesn't necessarily mean it stops and goes down from there. They may still continue to rally, but we know that now the market's going to be running up to here or higher to finish. All right, so that is that. Our moving averages are all pretty much in line. And well, what we have is to go over to the futures market and take a look. All the moving averages are still looking pretty good, even here. I'm going to be here on the futures market. On the hourly, yeah, they're turning because we had a pretty good sell-off. But I think it's just going to be as quick to turn and go back in the other direction. And so I do think it's like 1, 2, 3, 4, 5, A, B, and a C. And again, same situation goes. And I'll tell you that I've come and I put it immediately on my line chart. We have a little bit more room, as you can see. So this could be A, B, and this is a C. We got one touch a little more, and then we rally, or it's done and we rally. And that would put the three here and the four there, and we'd run from there. And I'd have to put it over. So, but just keeping it on where we are in terms of putting in that fifth wave up, this is all for that third wave. So I'm thinking if the third wave still has a little bit more to go, then we're going to rally, and here are our markers. And here for this third, here are the markers. So we have 46,470 to 75, and then 46,697, 700 up in here. Now, if I were having to put this together and say that that ended the fourth wave, we'll have one more. I'm going to put this up there just to kind of say what we got going on. And you can see it's pretty much that same area. We're up here at 46, almost 47, 46,700-ish. The 100% is just below this. So you see, these all line up to not only complete this fifth, but also complete this third, as it should. And so we're not seeing a lot of difference between. Let me take that one off for right now. So again, I'm leaving these here, and they're all in alignment, and it actually rolls right around this one right here. So 46,500 in that area, 75 to 500. So that's kind of that picture. And here I'm just going to flip out to the daily, and we're just going to take a look. You can see there's the 8, the 20, the 50, the 200, still very much in alignment to go up. The hourly, which of course is much more sensitive, you can see that the 8 has come flying back down, piercing through the 20 and getting ready to pierce the 50, which could, on an hourly chart, put this back in a negative position. And then again, as I have pointed out, let me just kind of go back there. Let me just go this way. And that I do have the alternate, which I'm not using yet, and that would be the ABC for wave one, ABC for wave two, and we're finishing wave three, but it would allow this wave to cross over and not damage the overall count. So if I left this as ABC, A, B, and this is ABC, could be the third, and we're getting a fourth. And again, it just gets very difficult because, to call this, to, to run up and call this the completion point for not only this third, it doesn't fit real clean. So I need more upside to kind of put even that into a diagonal. I can put the beginning into a diagonal so we can get the crossover if I need to put this three in, but I think I think the market needs to move higher first just to put everything together. So bottom line, if the futures market starts to get really fuzzy this evening, once we get Globex open, it's going to put a strange twist on this. Not impossible to get over, but it's going to take a lot for me to kind of go and maybe deconstruct or just kind of figure out what actually I can put into place here. Um, and that's actually where I'm going to leave this. So my initial for the beginning of the week is that we rally. Now we might drop a little bit more, and it's gonna become tight. And so I'll be taking a look, and I'll really be working hard to kind of keep it together for the Dow. The other markets aren't in that same position, and so either that or this is still within the third, like I said, and this is one, two, three internally, one, two, and I got another one, two, three, and this is a four, and that's the one. So that's one of my alternates. Not this one. This is the one because we're still going to rise up to finish this internal three. So this three could move up, which saves the day, to be honest with you, and puts us up here. That's why I've left those there. Because if this three has to move up to save the day, so to speak, and the wave pattern, well, so be it. Now we have 46, 322 to 46, 472, 470 to 75. And is that possible? Yeah, it is. If we get some dynamic rallies tomorrow going across the board, particularly here in the Dow, there's plenty that can move it, then I'll be looking. If not, then we'll take it up. But we're going to allow this to unfold first. A little bit longer term, the very, very near term picture might get a little bit confusing, but I'm still looking for this market to move up and to finish the larger pattern, which again is here. The minor fifth wave and the minute fifth wave yet to come and yet to complete. And where is that next one? Let me just kind of put something else out there. For some reason, I didn't have it up. I'm going to put that one up there. Where is that one? Not that much. So let me go one more and take it out of that and put back what it was. And there we have 54,000. Wow. So it doesn't mean that that's where the market's going to go. It just suggests that's where the next, on a minor degree, once this gets broken, if we're still looking at upside, it kind of tags it to where we're getting the minute fifth, and then all the fifths into the breakdown here. We'll be completing everything on the way up, including that. So it doesn't necessarily mean we're going to 54,000. I'm putting the next level out there to say, well, that's where the minor degree has its next level of stronger resistance. Doesn't mean it's going to get there because we have minute degree, we have the lower degrees that still will have resistance that complete each level up. Okay, I am going to end it there. And our next weekly update will be next week.